Imagine for a second that you have $500,000 in your pocket. That is a lot of money. With that kind of cash in 1995, you could buy a decent 4-bedroom house in most American cities and still have money left over for a new car. Now take that same $500,000 and try to buy a home in 2026. In most cities, it gets you a fixer-upper that smells like mold or a condo where you can hear your neighbor sneeze through the walls. Welcome to America, where an entire generation is being locked out of the one thing their parents told them would make them rich: owning a home. You see, while the rest of the world was moving forward, America decided to turn housing into a financial casino. We stopped building homes for people to live in and started treating them like stock portfolios. The result is a slow-motion disaster that is trapping millions of young Americans in a rental cycle they will never escape. In this video, we are going to look at how the American housing market became a trap. We are going to talk about the 40-year mortgage nightmare that some experts are now pushing as the solution. We are going to meet the families drowning in payments they cannot afford. And we are going to ask the question nobody wants to answer. Is the American dream officially dead? Buckle up, because this one hits close to home. The great affordability collapse, or how buying became impossible. Let's start with the math, because numbers do not lie even if real estate agents do. In 2019, the median home price in the United States was around $320,000. That was already high, but it was manageable for a family with 2 incomes and decent credit. Fast forward to today, and that same median home price has shot up to over $400,000 in many markets. But here is where it gets brutal. It is not just the price that went up. Mortgage rates exploded. During the pandemic, you could get a 30-year fixed-rate mortgage for under 3%. That is basically free money. But today, the average 30-year mortgage rate is sitting at 6.16%. Some buyers are paying closer to 7%, depending on their credit. Let me show you what that means in real dollars. Imagine you're buying a $400,000 home with 20% down. That is $80,000 as a down payment, which most young people do not have lying around. At 3% interest, your monthly payment would be around $1,350. At 6% interest, that same loan costs you $1,900 a month. That is an extra $550 every single month for the exact same house. Over 30 years, you're paying an extra $200,000 just in interest. And it gets worse. Wages have not kept up. The median household income in America is around $75,000 a year. After taxes, that is maybe $55,000 in take-home pay. If you are spending $1,900 a month on a mortgage, that is almost half your paycheck gone before you buy groceries or pay for gas. Financial experts say you should not spend more than 30% of your income on housing. But in today's market, young buyers are spending 40 to 50% just to get in the door. This is not a market correction. This is a wealth transfer from the young to the old. Boomers bought their houses for $100,000 in the 80s. Now they are selling them to millennials and Gen Z for 5 times that amount. The ladder has been pulled up. The lock in effect, or why nobody is selling. So why do not prices just crash? If houses are too expensive, should not the market correct itself? That is what is supposed to happen in a free market. But here's the trap. Nobody is selling. Let me introduce you to a fictional couple. Meet Sarah and Mike. They bought a house in Austin, Texas in 2020 for $450,000. They locked in a mortgage rate of 2.75%. Their monthly payment is around $1,500. Now it is 2026 and they have 2 kids. They need a bigger house. But here's the problem. If they sell and buy a new house today, they will have to take out a mortgage at 6% or higher. That new house they want costs $600,000. Even though they would make a profit selling their current home, their new mortgage payment would jump to over $3,000 a month. They literally cannot afford to move. So Sarah and Mike stay put. And so do millions of other families just like them. This is called the lock-in effect. About 80% of homeowners with mortgages have rates below 6%. Most of them got those rates during the pandemic. If they sell, they lose that rate forever, so they stay. This creates a supply crisis. There are not enough homes for sale because the people who own them are trapped by their own low rates. And when supply is low and demand stays high, prices do not fall. They stay expensive or they go up even more. It is a vicious cycle. Young buyers cannot afford to get in. Existing homeowners cannot afford to move. The whole system is frozen. The banks are making record profits while families are getting squeezed on both ends. The 40-year mortgage gamble, or extending the pain. So what is the solution? Well, some very smart people have a brilliant idea. If people cannot afford 30-year mortgages, let's just make them 40 years. I wish I was joking. In early 2025, a nonprofit CEO named John Hope Bryant wrote an op-ed arguing that America needs to adopt the 40-year mortgage as the new standard. His logic is simple. If you stretch the loan out longer, the monthly payment goes down. It makes homeownership accessible to more people. Sounds great, right? Wrong. Let me show you the math. Take that same $400,000 loan we talked about earlier. At 6% interest over 30 years, you pay about $900,000 total. That is $400,000 in principal and $500,000 in interest. Now stretch that same loan to 40 years. Your monthly payment drops by maybe $200. But over the life of the loan, you will pay over $1.1 million total. That is an extra $200,000 in interest just to lower your monthly payment. You're not getting richer. You're getting poorer slower. And here is the kicker. A 40-year mortgage means you will be paying off your house until you are 70 years old. You will be retired and still making mortgage payments. Your kids will be in college and you will still owe the bank. This is not a solution. This is a trap disguised as help. But the scary part is that lenders are already starting to offer these loans quietly. They are not mainstream yet, but the infrastructure is being built. Because when people are desperate, they will sign anything. The rental trap or the permanent underclass. Let's talk about what happens if you cannot buy at all. Because for millions of Americans, that is the reality. If you are priced out of buying, you rent. And rent in America has gone completely insane. The average rent for a 2-bedroom apartment in a major city is now over $2,000 a month. In cities like New York or San Francisco, it is closer to $4,000. And here is the evil part. When you rent, you're not building equity. You're not investing in your future. You're paying someone else's mortgage. Every month you hand over $2,000 to a landlord who is using your money to pay off their investment property. They get richer, you stay broke. This creates a permanent renter class. People who will never own anything. They will spend their entire lives making other people wealthy. And when they retire, they will have nothing. No home to sell. No equity to cash out. Just a lifetime of rent receipts and a Social Security check that does not cover the bills. This is not capitalism. This is a feudal system with Wi-Fi. You have the lords who own the property, and you have the serfs who pay rent forever. The scary part is that this is becoming normal. Younger Americans are being told that renting is fine, that ownership is overrated. But that is a lie being sold by people who already own 3 houses. The end game, or what happens when the bubble bursts. So how does this end? There are 2 possible scenarios, and neither one is pretty. Scenario 1 is the slow burn. Prices stay high, rates stay high. Millions of Americans just accept that they will never own a home. The economy becomes a 2-tier system, the haves who bought before 2020, and the have-nots who rent forever. This leads to massive social inequality. It leads to lower birth rates because people cannot afford to have kids without stable housing. It leads to political instability because angry people vote for radical change. Scenario 2 is the crash. Something breaks. Maybe it is a recession. Maybe it is mass unemployment. Maybe it is just too many people defaulting on those 40-year mortgages. Prices collapse. Homes lose 30 to 50% of their value overnight. The good news is that housing becomes affordable again. The bad news is that millions of families lose everything. Banks fail. The economy tanks. It is 2008 all over again, but worse. Either way, the current system cannot hold. You cannot run an economy where the middle class spends half their income on shelter. You cannot build generational wealth when young people are locked out of the market. And you cannot call it the American dream when the only people who can afford it are the ones who bought in 30 years ago. Final thoughts, or waking up from the nightmare. So what is the answer? Honestly, it is complicated. We need to build more homes. A lot more. We need to cut the red tape that makes construction slow and expensive. We need to stop treating housing like a stock market and start treating it like shelter. But none of that will happen quickly. In the meantime, millions of Americans are stuck. They are stuck renting, stuck with insane mortgage rates, stuck watching their dreams slip further away every year. The 40-year mortgage is not a solution. It is a symptom. It is what happens when a system is so broken that we would rather trap people in debt for 4 decades than actually fix the problem. If you are young and you feel like the game is rigged, you are not crazy. It is rigged. The people who own homes do not want prices to fall because it would hurt their equity. The banks do not want rates to drop too fast because they make billions on interest. The only people who lose are the ones trying to get in, and that is you. Thanks for watching. If this made you angry good, that means you're paying attention. Hit that subscribe button if you want more deep dives into why everything feels impossible right now. And let me know in the comments, what is the wildest rent or mortgage payment you have ever seen? I will see you in the next one.